Hi, welcome to Neppy Invests. In today's video of the Appendix 4C releases that are coming out thick and fast, we're going to look at Anteris. Now, this is a company I do know a little bit about because I was a shareholder of this company for a brief period in 2013, I think, and they actually named at that point Allied Health with the ticker code AHZ. Then they changed the name to Anteris, kept the same ticker code AHZ, and then they changed the name to Anteris and changed the ticker code to AVR. So this company is notoriously known for burning through cash and also for doing, I think they've done at least 2 or 3 share consolidations. If you don't know what that is, that's just taking the shares and decreasing the amount of shares they have on issue. So for instance, if you had 10,000 shares and they do a consolidation, the next day you might only have 100 shares. Doesn't change the value of the company, but it just changes or value of the shares you have on offer. It just changes the amount of shares you have. So let's have a look at their quarterly cash flow for this month or this quarter and see how they've been doing. So receipts from customers, $2.2 million. So I'll have a look at the history and just see a very interesting history through the last 7 or 8 years that I've recorded the data from. And they're still burning through a fair bit of cash. So $1.7 million in cash negative burn, you might say. But if you look at the past 9 months, so the second column there is looking at 9-month activity. So they've brought in cash receipts of $6 million, but they've burned through $11 million in cash. So, burning through a lot of cash still, but maybe they're paring back a little bit. Through the last year, 7 years or so, we can see a really good increase in cash receipts from April 15 all the way up to 2018. The problem with those cash receipts increases is that because they were burning so much cash, those costs kept increasing with the cash receipts. So they were burning almost 20 or losing almost $20 to $25 million in cash per year. So they had to change things, and they started to change things in late 2018-19, but that meant the cash receipts started to come down a lot. So it's gone from 7.6 in the peak to $2.2 million in cash receipts last quarter. Not sure what they've done. I think they've probably sold some of their IP or some of their products. That's probably what they've done, but I haven't been following this company closely for the last few years just because there was no point just because they're burning through so much cash. And so I've mentioned they've already numerous name changes, numerous share consolidations, notorious cash burner. And this is just a history of them going back 15 years or so. So the first line here is cash flow from operations. And you just see from, 2014 all the way through to 2019, burning upwards of $20 million of cash in a year. And even though their revenues were increasing, so it increased from about $7 to $8 million, all the way up to $25 million. They just increased their costs as their revenues increase. That's not what you really want to see. We did see the market cap get to a high of almost $200 million in 2014. So that's just before or just after I bought. Luckily, I was sold out. Shares outstanding, even though they've only have 5.9 million shares outstanding. When I bought, and it says the share price below that would have been $133. When I bought, it was like 10 to 14 cents, and that just shows you the amount of share consolidation they've done. And their shares outstanding when I bought was not 1 million shares outstanding, would have been significantly more than that. And they've just gone through this share consolidation, and the share price is about $4 now. So, for instance, if I said I bought this company when it was 14 cents, now it's $4, you would think I would have lost a lot of money, or I should have just held on, it would have made money. But no, in fact, it's the complete opposite, because the share price back then would have been something like $140 compared to the amount of shares we've got on issue now. So it's really gone to about $140 all the way to $4. So if I held on, I would have lost a significant amount of capital. That all makes sense. I hope that makes sense. So the chart. So hopefully, if that didn't make sense, the next, not this chart, but the next chart will make sense. So this just going back a year, nothing much doing. It's forming a base around $4 in the past few months. Nothing too exciting with this. So I'll just go to the next. This is a daily 1 year chart. So the next one is the weekly 8 year chart. So when I bought, was way at the end of this period here. So if you can see my mouse here, maybe I'll just do this. Go to laser. Hope you can see this. So I bought somewhere in here, and it says the share price would have been $60, $80. It was not. It was 14 cents. Went to a high of $180. It did not go to a high of $180. Went to a high of maybe 20 cents or so. And then ever since then, the share price has been dropping like a rock. That's because they've been doing share consolidations. Every time they do a share consolidation, share price goes up a lot, and then the share price keep dropping. They do more capital raisings. That's the other reason they do share consolidations. They can do more capital raisings. Increases the amount of shares on issue. Gets too high the amount of shares on issue, then they have to do another share consolidation and rinse, repeat. All because they can't manage their costs. They just spend like crazy. If they could manage their costs, they would have done much better, I think, in the long term. So if you are an Anteris shareholder, long-term shareholder at that, just leave a comment in my sections below to tell me what they do. I don't really want to research them all that much. I think the name changes are just a bit of a con, and hopefully they do start, hopefully they've got new management in, and that could turn this company around. Otherwise, it'll remain just a little bit of a thing I look at now and then, just because it was a holding I had for a very short time in 2013 or so. Hope you've enjoyed this video on Anteris, and probably if you do a sort of a case study on what not to do if you're a management team, Anteris would be fitting that bill to a T. So I'm not a financial advisor, so don't follow my advice. So Anteris management, don't follow that advice. I think it's good advice. But anyway, I'll talk to you again in another video. Have a good day. Bye.